The average construction project runs across a dozen different disconnected spreadsheets. And as we all know, that is exactly where mistakes happen. You update your RFI register, but you forget to claim the variation associated with it. A project management information system is designed to fix exactly this problem. So in this video, I'm going to explain exactly what a PMIS is, why it matters, how it works, and how it's going to become an increasingly important part of any construction company going forward with all the changes that are happening with AI. So what is a PMIS? Well, PMIS is simply one place where every bit of project information lives and connects. So your RFIs, your variations, your drawing register, your costs, your budget, your correspondence records, your approvals, all of it is in one system instead of scattered across 15 or 20 different spreadsheets. So in construction, this would be a purpose-built construction management software like Mastt. It's designed for organizing all your information, digitizing and standardizing how a project gets delivered instead of running it through all of these manual disconnected spreadsheets. The reason this is so valuable in construction because everything we do in construction is related. As I said before, an RFI leads to a variation, which leads to a change in our cost forecast, which leads to a change in the project's profitability. One single event would cause a change to 6 or 7 different registers. And it's why construction projects are so hard to manage and stay on top of it, because there are so many different ongoing things that all form part of this comprehensive picture of a construction project. And because of this extensive interconnectedness, it's why the spreadsheet system of managing construction projects reliably fails. The key thing about a PMIS is it's actually built around how your organization delivers and manages construction projects. So fundamentally, going a step further, let's dive into why a PMIS actually matters so much. Number one, the most obvious, is it's just going to reduce human errors. Spreadsheets are set up, they're fragile, they break, they rely on people entering information into registers and staying on top of what's happened. The best thing about a PMIS is it does all of this automatically. The second thing a PMIS does is it standardizes the way projects are run. We all know every construction project manager wants to do things their own way. Having a PMIS means every project is run in the same way, which means they're easier for management to track and control. The next benefit is the PMIS acts as the single source of truth. Instead of having 2 versions of every file or spreadsheet Rev 1 and spreadsheet to Rev 2, the PMIS is the structured database, which is the single source of truth for all project data. Because of this formalized structure, the next problem it solves is it actually becomes a source of project knowledge, and it prevents issues when a key person on the project leaves. Rather than when a key project manager leaves, you have a whole lot of half-completed actions that walk out the door with them. The PMIS is the source of truth. It knows the status of every task and what everything is up to. It makes handover much easier and prevents information leakage. And then because you're building and following a system that's proven to work, by default, you're acting in a proactive rather than a reactive way. You're relying on skilled individuals who may or may not make mistakes. You have a system that says when you get an RFI, you automatically, by default, raise a variation. When you raise a variation, it goes into your forecast cost to complete. This helps the team to maintain a proactive stance rather than being reactive and always trying to fight fires. Rather than relying or having to rely on the team to do an exceptional job, you're making it impossible for them not to. The final thing that I'm going to touch on a little bit more later, because I think it's a really important point to understand with everything that's happening with artificial intelligence, is the PMIS is your single knowledge database, your single source of truth for the project. What this means is you have basically a set of context which is easy for AI to access. And if AI can stay up to date with what's happening on your project, it's going to be 100 times more useful. Now, whether you're a project owner or a contractor, PMIS is still useful. If you're involved in any way, shape, or form in a construction project, you do need something like this to track and manage your project performance. PMIS isn't just for construction companies. Okay, so we understand what a PMIS is and why it's useful. How does it actually work? Well, the mechanism, put simply, is a centralized data repository. So your registers, your project budgets, your correspondence register. So that's your centralized data repository, and it connects to your processes. You have your database and then you have processes. They're the 2 core components of a PMIS. So for example, your data is your RFI register and your variation register. The process is that every time your client issues you a new set of drawings or responds to an RFI, by default, it creates a placeholder for a variation. So that process of creating the placeholder for the variation, that is the process component of the PMIS, when the actual data, the variation register, the RFI register, that is the underlying work. That's the underlying data. And then because these processes are automated by the software, they happen by default. They don't rely on people remembering to do things. They don't rely on people having to enter data into spreadsheets. They just happen automatically. For example, in Mastt, when you create a new variation for a subcontractor, it automatically adjusts the cost to complete. It's a small example, but it's important because it's tying the commercial function of the variation with the cost tracking function of managing the budget. So the core components of a PMIS will have some sort of schedule or some planning or schedule function, such as programs, task assignment, and resource calendars. I like to think of this as the when of everything's happening. So we have our activities and when they're planned to start and finish. Then for that same set of activities, in addition to having a time component, they also have a cost component. So how much is it going to cost to do the task? Typically in construction, this is also associated with a quantum of work. Then based on these cost and performance metrics, if you're familiar with something like earned value management, we also have our performance tracking measurements like our estimate to complete, our variance, our schedule performance index, our cost performance index. These are layered on top of this underlying cost schedule data. Then we'll have some sort of reporting and communication layer, which basically makes it easy for people to go into and understand the underlying data rather than having to delve through tabs on confusing workbooks. And then there will also be some sort of document control and management, like drawing registers or correspondence tracking. Okay, so if you're familiar with using tools like ChatGPT or Claude, you'll understand the importance of data and context to getting the most out of them. So when we talk about a PMIS, we're talking about having a single source of truth for the project information. What this means in terms of looking at how we use AI to deliver construction projects, we basically have all the context and information AI needs to do a task sitting in one centralized, easy to access location. Long story short, a PMIS is absolutely fundamental to any construction company if they want to get more out of tools like Claude and ChatGPT. So fundamentally, these tools like Claude, ChatGPT, they're completely agnostic. They don't know anything about you. They don't have your background. They don't understand your project history. For you to actually get them to do useful work, you need to be able to feed them context. Having a PMIS is going to make that process of giving context to the AI models so they do genuinely useful work 1 million times easier. So while yes, historically, PMISs have been important for the reasons I outlined previously, this is only going to be more and more important as time goes on, because for AI to work effectively at managing construction projects, it needs specific information about you, your company, and the way you do things. And the way in practice you can set this up so it's easy to feed into AI models is through a project management information system. One project well takes attention to detail and hard work. You apply that same strategy to trying to run 5 projects in parallel, your life will become a misery. In fact, a study found that you'll lose around 75% of your time context switching between different projects. The solution to managing multiple projects at once isn't working harder or managing your time better, it's using a completely different strategy. And fundamentally, this is the difference between project management and program management that resources like the PMBOK, the project management body of knowledge, talk about. Good project management is a function of effort, attention to detail, and fundamentally hours worked. Portfolio and program management is a function of systems, judgment, and strategy. So the first question to ask is, are you managing multiple projects yourself, or do you have a team to manage them for you and you're sitting above the team? Obviously, if you're trying to do all of this yourself, you're going to get capped on your actual capacity and bandwidth to manage multiple projects. But if you do have a team, then the ceiling lifts on how much any one person can do. And the processes and strategies I'm going to talk about in this video are much more focused on what you can set up a team to do. So step number 1 of this framework is going to be how you actually set up an individual project to run without you. So The purpose of this first step is to give each individual project the best possible chance of running successfully and autonomously. This is all going to be about building processes and allocating responsibility for those processes. So I would say there's 4 angles you want to look at this from when you're talking about the processes behind delivering a project successfully. So number 1 is going to be the actual on-site delivery and coordination. So basically getting the right people, materials, and information to the right people at the right time so they can actually do the work. Then we have more broadly our project management functions. So these are things like our cost, our schedule, our quality, and the systems and processes behind those. Then we have our contract management and contract administration processes, which is really making sure we're doing what is specified in the head contract and then administrating our subcontracts and our procurement properly. So we're not paying our subcontractors more than what we should, and we're getting value for money on all our procurement. And then we've got our document control. So this is just things like having a really good project folder, a good filing system, and having basically systems in place for every bit of new information, what you do with it, how you track it, how you store it. So everything you need to know and all the correct revisions of information is easy to access. Now, within these 4 domains, delivery and coordination, project management, contracts, and document control, every process has more or less 2 modes. You've got the business as usual tasks. So these are the recurring, ongoing tasks that happen on a set frequency. So making your monthly payment claim or a weekly project report that you send to your client to show them what's happening. Then you have your event-driven tasks. For example, what happens when something new happens? For example, you receive a new RFI from your client, you get a new revision of the drawings that has a document control process that kicks off. It has a change management and contract management process for preparing the variation associated with it. So very important to basically understand the core groups of processes, and then basically the 2 modes within the processes, which is the business as usual task and the change management task. So the goal would be to take every workflow you have and then to map it out into a series of steps. For example, this is a project controls and scheduling workflow that I've broken down into 3 categories. We've got establishing the trackable baseline and setting up your rule of credit system, the actual control group, so the weekly and monthly checks, and then you've got some sort of closeout process. And within here, we've got checks that happen when we deviate from our planned value, when we're going off track. What do we actually do about it? So basically, we're taking this process, we're breaking it down into discrete steps, and we're defining exactly what has to happen in each step. What we're trying to do is give repeatable structure to a construction project. Then once we have this structure set up, we basically want to allocate responsibility to do the task. And we want to do this in a hierarchy. So number 1 would be, what can we get software or a tool to do? This is obviously going to be the most scalable thing. For example, can we have an estimating or cost control software that takes our original construction estimate and then maps this out to our predefined budget cost codes? If we can set up a software that does this, this is obviously going to be the most effective way to do this. As an extension of software with artificial intelligence and tools like that now, we can get AI and automations to do some of these tasks. Or another example of this would be using a software like Mastt that auto-generates all of our project reporting and our project dashboard. So there's no actual work that goes into us. Once we set up our cost codes, our schedule, our risk, all of this happens automatically. So again, that is a great way to do things. If we can get software or an automation to do it for us, again, perfect. We've actually taken work off our plates and we know it'll happen the same way every time. Now, obviously, there's huge limitations in what software and even AI can do. So the next level above this, I would be to say, can you actually outsource some of these process to lower cost countries like the Philippines using services like Upwork? For example, preparing your monthly payment claims. If that is simply a process of looking at your percent complete for each of your activities and matching them up to your schedule of values, is that something you can outsource to overseas or some sort of virtual assistant? Then the third layer above this would be what's left, which is where you need a physical on-site construction team, which is obviously going to be the most expensive thing, but it is going to be important for things like liaising with subcontractors, dealing with day-to-day issues. Those are the leftover tasks that you make the responsibility of your construction team. So the goal here is what we've done is we've taken every process and we've allocated somebody or something. So we know that task is going to be covered by some automation, some software, or a person who is responsible for doing it. We're basically turning our construction project into this repeatable set of workflows. So What this means is basically your team is doing the day-to-day tasks. So where do you fit into all this? You need to set up a reporting and escalation process so you can be both aware of what's happening and your team knows when they need to engage you. The reason this is important to define properly is from the reporting perspective is you can carefully keep track of what is actually happening. For example, on this project, which is done in a Mastt project dashboard, you can clearly see exactly where there is variance to budget, what cost codes we have issues with, whether the project is being delayed in certain areas. As a manager, you don't have to dive into messy and complicated spreadsheets to do this. You've got all the information you need right there available at your fingertips. The other important part of this is the actual escalation process. So for example, if your team knows without your approval, they can spend $2,000 or $5,000, then you're giving them the freedom to make their own decisions. And again, you're just going to be pulled less and less into the everyday. If for every minor purchase you have to approve it, obviously that is going to generate an admin burden for you where you're going to have to do everything. But there are certain things you would obviously always want to be escalated to for about, so for example, like safety concerns, maybe big risks, big commercial decisions, issues with the client, those topics should automatically be escalated. So really the reporting and the escalation is a bit of a 1-2 combination. Reporting lets you at a regular cadence or frequency gain insights as to what's happening in the project and keep up to date. The escalation makes sure when big issues happen, your team is automatically pulling you in. Now, once you've set up your projects to basically, as much as possible, run autonomously without you by building really good systems, then you set up a way of reporting and escalating. The next step is what is your job across the portfolio or program of things? Well, it's pretty simple. You have to keep on top of the key metrics for any project. So again, cost, schedule, safety, risk. These are the things that are going to be in your project dashboards. You need to assess then whether you have confidence in the project team. So it's your job to make sure and be hyper aware that they are capable and doing the tasks that you've set out for them in your processes. And you also need to be very aware of the big issues on each project. Those are the times where you really dive into the detail and you solve the problems because those are the big problems that require your attention. And what this means is you're not really going to be splitting your attention equally across all 5 projects and automatically doing 1 day per week because one project might not really have any other work, but another project might be going bad and there's a big issue you have to solve. So that's where your attention is going to be drawn into. For example, I was working on a major solar farm. There was a massive issue with the procurement of the inverters and delays from the supplier. That is the thing that all the senior management got dragged into because that was the big issue that could derail the project, which is where their time, attention, and expertise were required. So you don't have to think about yourself as splitting your time evenly across all your projects. You're diving into one project when big issues come up. So the other part of this is actually whether you have confidence in your team to do the work, whether they need more support or training, or whether they have things that are over control. And your 2 layers for doing this is obviously your actual project dashboard and looking at the performance of the project and understanding whether things are actually on track or not. The second layer of this is, I think, an effective strategy is to really dive very deeply into the specifics. So dive into your budgets, look at a specific issue such as the preliminary costs. How are the preliminary costs been forecast? How are you forecasting this out? How are you forecasting your schedule? And basically doing like a 5 whys exercise and diving in deeper and deeper. And if your team's answering confidently, then you can be sure they're doing it properly. This is a really good check to make sure that people aren't just kind of fluffing their ways and trying to sort of hide things from you. So always never be afraid to really dive into the detail and understand exactly why something is the way it is. So those are 2 really good strategies you can use. The overall project order, looking at the overall project dashboard, and then being willing to dive really into the detail of exactly how something's been calculated, how someone has come up with it, how have they come up with this duration of construction works, what is driving it, where is the build-up of it, can you be confident in it? Those are, I guess, the 2 strategies you can use. And if you've got a lot of confidence in a team, then you can back off them. But if you're finding that people aren't keeping up, they're not following the processes, they're not keeping on top of things, then that is when you have to put more of your attention into getting them on track. Then the third step to this overall process is the actual portfolio and program management. So again, this is looking at how your entire picture of multiple projects running together. Because all these projects will have different start and finish dates. They'll have different cash flow requirements. Your job is basically then to look at all these projects together what their cash flow requirements are, what their resources requirement, and your job is to pull everything together. So say, for example, you're a self-performed contracting business, you know their earthwork starts on this project on this date and finishes on this date. Then we've got a lull, then the excavator is going to go to the other project. So this is you sitting on top of the projects and allocating resources appropriately for them. Or for example, you know you've got 2 big projects starting at once. Your job is to make sure that you have sufficient resources to deal with both of them. Or you might have a massive gap between 2 projects and be willing to more aggressively tender and bid another project so you can secure a project and you can smooth out your resources. So really this comes from understanding everything together, probably looking more specifically at the resources and the resource requirements for each project, and then how to basically pull it all together. And the way you do this is with program reporting, where you're pulling together all of the different projects, looking at the starts and finish dates of all these projects and pulling and collecting all the information together to get a program level cash flow, program level starts and finish dates, and basically understanding how, as a business, all your resources and cash is going to be split across these different commitments. With the release of the Claude Opus models, Cowork, and new features like skills, plugins, and connectors, Claude is getting unbelievably capable at different finance tasks. And Claude is actually leading the entire industry on finance benchmarks. And leaning into this, Anthropic actually released a free Claude plugin with 10 ready-to-run finance agents. So considering in the construction industry, one of the biggest problems contractors actually face is solvency. Basically, what this means is that profitable contractors can go broke on projects they deliver well. And it's actually not because they underquote the project or run the job badly. It's simply because they don't understand the timing of when they incur expenses and when they actually get paid for the work they've completed. And with standard conditions like 10% gross profit margins on projects and 30, 45, or even 60-day payment terms, understanding the timings around when you're receiving money and when you're getting paid is absolutely essential for any successful construction business. And I really think the application of AI to cash flow forecasting and finance managing for contractors is a huge opportunity because it's one of these sets of tasks that fall into the should do but don't have the time to do properly. Every contractor knows they should be doing more to address this problem, but fundamentally they're too busy and under the pump to do it properly. And I really believe this is such a good strong use case for contractors because it falls into this core thesis I have about where to apply AI. And it's fundamentally that we should be using AI as a data reformatting tool. And when we actually think about what the core methods behind cash flow forecasting and managing cash flow for contractors, it's really this process of taking our expense data, our contract terms and conditions around payment, our project schedule, and our estimate and budget, and combining all this information together into a cash flow model. So we're actually doing the hard work already by having accurate estimates and budgets, maintaining our project schedule, filing our expenses in the correct folders. All we're actually doing with the cash flow side and using AI as a cash flow forecasting tool. So really just drawing all of these combined sets of data and pulling them together into a model. So in this video, I'm going to show you exactly how and where you can use Claude to help with finance management tasks for construction companies. I'm going to break this down into the pre-construction process where we actually go through and build our original finance model for a construction project. I'll then move on to the construction phase where how we can leverage AI for things like cost tracking and maintaining our cost forecast and updating them. And then finally, the business level where we roll all this information up into a cost database and a business cash position and business cash flow forecasting exercise so we can make accurate predictions about the future of our construction business and can make important decisions like whether we have the cash to hire additional staff or pursue certain projects. Okay, so first up, I want to talk about the architecture and the Claude features we're going to use for a tool like this. So the first tool we're going to use from Claude is actually Claude Cowork, which, if you're not familiar with it, is similar to Claude Chat. However, instead of having a chat where you have to copy in all the context it needs, you actually open it in a folder on your desktop. It can then read and write to all the files within your folder. So for example, I have an example construction project I'm going to go through, which is this one. Within that folder, I have the estimate, expenses, payment claim register, and the program. And my Claude can read and write to all these different files simply because I've opened it in this folder with sample data. Now, the next feature of Claude we're going to be used is actually on the Customize tab, which is connectors and skills. So the first one I'm going to talk about are skills. So skills are pre-built construction workflows that we build once and then we can store to reuse and call every time. So the three skills I'm going to be going through is the actual cash flow forecaster skill, which again is a series of instructions on exactly how I want Claude to forecast out my cash flows. And nested within this is a format output template I want it to do. So every time I want Claude to do a construction cash flow forecast, instead of having to explain from first principles the entire way I want it to do it, all of this is nested within the skill. And within there is actually a template format I want it to follow. And again, you can have lots of different skills, but the threes that I think are fundamental to using Claude for construction finance is this construction cash flow forecaster, a cash reconciliation skill, which is a scheduled skill you go through once per week or once per month and actually updates your project cash position, and then our business cash position skill, which does the same thing except across a portfolio of projects. And then the final feature we have is actually a bundle of skills and connectors, which is referred to as a plugin. So Anthropic actually has a free Claude Finance plugin you can use. And what this has within it is a series of pre-built skills that Anthropic has created and connectors. So connectors is the next feature I'll talk about, which is actually how you connect to external software like Microsoft 365, Gmail, or your other sources of project information. Now, again, to access this pre-built Anthropic skill, simply click Add, Browse Plugin, and just type in Finance. And this is the Anthropic Finance skill that you can install and customize to how you want it to do construction tasks. So skills are your pre-built workflows. Connectors are your integrations into your other software and tools. So this happens through a process called MCP. And all it is when you add a connector to Claude, basically, for example, I have a connector to Airtable here, or for example, I have a connector to my Google Drive. What this means is now Claude can potentially, depending on the rules of the MCP, can read and write to all those files. So when we're talking about Claude for finance, probably the most important one is you actually want integration into your accounting software. Unfortunately, for example, QuickBooks, QuickBooks does now have an MCP connection. I stand corrected. So now you can connect Claude to your QuickBooks account, which is actually awesome. And I'm going to add that now because I definitely need that. Now, this actually leads on to my next point, which is where your data lives. Now, my rule with data is you should only have one source of truth for each set of data. Some of this might be in your QuickBooks or accounting. And to be honest, I'm actually really excited that the QuickBooks integration exists because I was doing some horrible work around using Zapier, but the fact that this exists is actually great. But I'm getting off track, but your source of truth should actually be your accounting software. The exception to this, I would say, is your actual project data and invoices from suppliers and payment claims you've made to the client that may live in your actual project folders. The reason this is an important point to speak about is that you want your data to live in the source of truth. You don't want your data to live within your workflow. So your skill should purely be the actual process itself and where this data lives. So it should have instructions on, for example, where your project data lives, how to connect to your accounting software, or the structure of your chart of accounts in your accounting software. That should be in the skill. So the skill is like almost the map of where this data lives, but you don't want any data within your skill because that will become a nightmare in terms of version control. Okay, so then I'm going to go open a new chat in Claude Cowork, and I'm simply going to say, so to call a skill, you can either type out the name of the skill using a backslash, and this is the instruction to Claude to run it, or you could, in the prompt, just say, run my cash flow forecast skill, and Claude is smart enough to know that it should run it. But what I'm going to say is, for the Riverton warehouse project, please run the construction cash flow forecast skill and give me a forecast of my cash flow for the project. And I'll just, for some context for the video, I'll say, please understand that this is a sample for a video, so make any assumptions you need. So now Claude is going to run this skill, and what it's going to do is it's going to the data in this folder, so my estimate, my schedule, my contract terms, and it's going to combine all this together to actually generate my cash flow forecast. Okay, so the first thing I want to talk about is how do you actually set up a skill? And I have a very simple framework for doing this. Number one, you have your input context. So this is the background information it needs to run the task. Then you have your methodology, and then you have your output format. So basically what I will do, and again, this is really easy for construction companies because if you've been following or doing some of these things historically, you have a ton of really good examples. But basically what I'll do is I'll find 5 examples of where I have done this specific task. So where I've taken an estimate, a program and contract terms, and how I've actually built this into a cash flow forecast. And then I will just go through, give it 5 examples and explain in detail exactly how I want it to do this process. So for example, I'll say to it, here is a previous example where I have my input contract terms and conditions, how I take from my contract terms and conditions, the payment terms and the contract payments. And then I use this to forecast out my revenue based on when we're actually doing work, which you get from the project schedule. Here's some examples of this, and here's the exact output format I wanted to take all this information and compile it into a skill. Okay, so in terms of this actual skill, the first part of this is understanding your revenue, which is your payment from the client. This is going to be driven by 3 variables, which is your contract terms from the client, which is your basically from when you submit a payment claim, how many days after that does the cash land in your bank account, your retention percentage release, and any security, as well as if you have any mobilization or advance payments. Then you have this schedule of values in the contract, which is a list of the payment milestones you'll have. So for example, your earthworks has a value of $150,000. Your building services has a value of $50,000. So this is the broken down of your contract lump sum and the items against which you claim against. And then this third part of this is your actual baseline program, which is understanding when all the tasks will occur, what order they'll occur in, and when they are likely to incur. So if we think about combining those 3 bits of data to understand our revenue, we have the value of what we're getting paid broken down by scope items. We have the contract terms that determine from when we make a payment claim once we've done the work to when that cash actually lands in our bank account. Then we have the program, which is the overall breakdown of the duration of the construction project and when we think these tasks are going to take place. And combining this all together, we can map out our revenue. The second part of this is actually understanding the timing of our expenses, which determines the type of expense we have. So for example, labor or self-employed employees and overheads will be paid either weekly for typical blue collar staff or monthly for white collar staff. We then have our overhead costs again, which are our recurring project overhead costs, like the cost of site facilities, which would typically be paid monthly. We have subcontractors, which are as per the subcontract payment terms. We have materials, but again, you have to be careful with materials, and this is something you want in your construction program, is often you will order materials long before you have actually done the work, and as per the contract, you can't actually claim for your materials. So you might actually pay for your materials a couple of months before when they're potentially claimable for a client. So that's very important to have something to have in your contract, and then also any sort of plant hire, and also any project mobilization costs like design fees or insurances. So it's very important that you understand the breakdown of your expenses and the timing of these expenses. And again, this is in the actual skill, the instructions on how to do this. With your expenses, it's the same philosophy as your revenue, that you're breaking down when these expenses occur across time, with the important caveat that being anything like materials where you're paying for stuff potentially a couple of months before, but that is something you want reflected in your construction program. And then as you see, when I've run this first skill with just that very simple instruction, that it's actually gone and generated me a full cash flow forecast using the data in my folder. So I can actually, this is an actual Excel file that you'll notice it has created in my folder. So I can actually edit and change things if I want. If I just bring this up, we can see it has created my forecast. It is mapped out from the project schedule, the overall month by month of the project. It's made some assumptions around that we have an opening bank balance of 0. So it's actually calculating the cost variance for the project. It's got a breakdown of our different types of expenses and when they're occurring. It's determined the receipts from the client, which would sum to our overall project value. And then it has told us our maximum deficit, which is the maximum dollar value we would need in our bank account to finance this project. Again, this forecast, it's done. This is the template. So this template that it's populated is nested within the skill. So every time I run it, it populates the same template. You'll find something that sort of is a bit frustrating with AI is if you're instructing things without an output template, it'll do stuff in always a slightly different format. The advantage of having the template within the skill is that it's always going to output the same thing in the same way. And then it is actually put this into an S curve where you can see it's got our cumulative cash out, our cumulative cash in, and the sum of these, which is our net cash position with our maximum deficit. Now, the final thing I've built into this skill is some scenario analysis, which basically comes back with recommendations on what the biggest levers we can pull are to improve the cash position of the skill. So number one is obviously 14-day payment terms. If we reduce the period between which we are making claim to when we're getting paid from the client, that's going to improve. We could claim a 5% mobilization fee, front loading and claiming legitimate items. Smaller levers, for example, would be reducing the deposit for our steel subcontractor. If we combine all of these, we can improve our cash position by $840,000, which basically takes our maximum cash deficit of negative $950,000 into negative $110,000. And importantly, this maximum cash deficiency, that is the number we need to understand, because that's how much cash we need in our bank account to finance the project. So this is something I would run during the pre-construction phase. But what about during the construction phase? Well, the construction phase is we'll have a series of different skills we run. The first one I would run would be to actually take our estimate and convert it into a budget. So I've actually built this into the project cash reconciliation skill, but realistically, I should probably have two skills here. One to actually take our estimate and convert it into a budget. The other one to actually do our weekly or monthly update of our project cash position. And I'll say, can you please run the project cash reconciliation skill and provide an update forecast against our budget? Again, this is an example for a video, so please make up any information you need. Now, obviously, if this was a real world scenario, I wouldn't be saying to make up any information you need. You'd get AI to look for the information in your accounting software or the relevant data sources, or to query you with what it's missing. Right, so the first part of this is it actually needs to take our estimate and convert this into a budget. Now, this, again, I think is a really good thing to pre-package as a skill, because you think about it, our estimate is always going to be structured as in the way the client wants. They'll want it broken down into their pricing schedule. All we're doing is then we're taking the cost of the project, and then we're pre-populating in our budget headings. Because remember, an estimate is the easiest way to calculate the cost of doing a project, but a budget is how we actually track and manage our expenditures. For example, if you're doing concrete works, you might have a budget for formwork against every single structure. But in reality, when you're delivering the project, you would just do one initial order for formwork, and that formwork would be used across 5 structures. So you'd be better off having one single material cost code. You want to take all of these rules and pre-bundle them into your skills. So there's rules about how it takes the estimates or how you've calculated the cost of the project and converts this into your budget. So this is how I organize my construction budgets, just with a simple Excel register where you have a breakdown of all your cost codes, your quantity, your unit of measure, and your rate, and then you can forecast it out. Again, cost tracking is about profitability as well as it is about cash flow. So you would use this to actually track and manage your budgets to determine if the works is coming in under budget or not. Now, if you do want a way better way to organize and manage your cost data than a messy Excel spreadsheet, you could actually use the cost tracking feature within Mastt and track all of your different project budgets, and then actually use AI to convert these into a project dashboard. So basically, through prompting, you can create an entire construction project dashboard that's linked to your actual cost data. Again, or you can use the messy spreadsheet way. Yeah, so if we go back to our Claude chat, what is happening? Claude is actually going through and doing our monthly project cash reconciliation. Now, what this is doing is it's going through and it's pulling all our actual expense data. Again, using that QuickBooks MCP, we could link this to our actual accounting data. It's looking at your subcontractors and suppliers invoices. It's looking at the payment claims you have made to the client. And also it's looking at your actual progress and percentage complete. It's looking at any forecasts you have maintained or updated in your cost tracking and your actual forecasts for different budgets. Basically, it is compiling all this information together. Again, we're using AI as a data transformation tool, and it is going to give us an updated cash position of the project. Okay, so now if we review what it has gone and done, it has gone and prepared our cash position, so our position today, our cash out in the previous month, our genuine cost overrun today. Again, that's looking more at the profitability of the project. It reforecasts our maximum deficit. and reforecast out our closing margin. And we can see it is cost coded all our different expenses. It's pulled this from the expenses folder and our source of truth, which is the accounting data. It has gone and prepared our cost versus budget for the different codes and updated our cash flow and forecast. Again, this is done in a separate file, but a better way to set this up would be to maintain that original S curve. That is where our cost forecast lives. And then our cost tracking sheet is where our project profitability lives. And that is where we're coding the expenses. And again, I keep coming back to the same point that this is such a good use case of AI, and it's going to do it very reliably because all we're doing is taking data from different sources and pulling it together and formatting it. Now, the final stage to this is we're going to run our business cash position. And I'm going to say, based on the data for the 3 projects within this folder, can you now forecast out our business cash position, also taking into account our business management costs, and create a Claude live artifact showing this? So that, again, it's going to run the business cash position skill, which is going to look at all our individual project data. So again, this is taking the data for the 3 projects I have within this folder. So the Riverton Warehouse, the Belfield Childcare, and the Marston Depot. And it's also factoring in these business overhead costs we have, which is around $85,000 a month of staff and project salaries, office rent, corporate insurances. So this is a recurring monthly expense that's going to get included into this. And then it's going to create a business cash flow forecast. But instead of doing this as an Excel file, I'm going to do this as a Claude live artifact. Okay, so one point to stress with this business cash flow forecast, again, now we've got, this is a really important point to talk about, but this is now, when we look at our project cash forecasters, we're pulling project data. So again, this is going directly to the source of truth. But now our business cash flow forecaster is actually pulling our AI project forecast, which sit on top of this original layer of data. So again, this is when we're deviating more and more from the source of truth. It's very important to state here that the quality of the information that goes into our actual business cash position and our forecast is only as good as the quality of our project information. So when we're running our business cash reconciliation checks, our monthly cash forecast, we have to be making 100% sure that the data that is going into these reports is correct, the way it is formatted, and the forecasts are all correct. Because then if our business cash position has a chance of actually being correct, it needs to be sitting on top of data that is correct. Again, garbage in, garbage out. It's the philosophy behind any of this sort of reporting. So what this has done is this has gone and put all of my data into a live artifact. So what this is going to do is, with a live artifact as opposed to a normal Claude artifact, is this now references the original sources of data. And every month when I rerun my business cost reconciliation, it will update as the data sources update. So what it is doing is, again, it's imaginary data. It's not a real business or a real project, but it's looking at my combined cash position of what is receipts and payments each month. It's looking at my net cash position and the closing bank account of my balance. It's looking at any forward low points or high points. And then this is then the source of data I can use to make important decisions. For example, if I know I have an excess of cash, I can afford to hire a second construction estimator. I will have the cash to cover that bill. If I can potentially invest this in purchasing new plants and equipment, but if I know I'm going to be tendering a new job that has a massive cash deficit going forward, then I'll need to set aside cash to do that. So it's very important that we understand our business cash position. And again, this is probably the biggest one where I'd be careful with completely relying on AI to do it, because it's, again, the project cash forecaster I think is fine because you're pulling the actual sources of truth. But again, this is pulling from the project cash position. So it's AI analysis on AI analysis. It's more likely to have missed things and be wrong. So just careful to understand the issue, the actual underlying data that's going into this. But now I have this business dashboard where I can look at my overall cash position. Again, the beauty with Claude, the beauty with AI is you can customize this the exact way you want to do things. I've spoken about the general philosophy you can use to do this, but again, the beauty of these tools is you can customize them to get them to do exactly what you want.